I want to bring in Joe Tigay, talk a little bit about some of these telecom companies with us and take a look at the macro side as well, with stocks still hanging out basically where we opened. Joe, interested in trading any of these companies, AT&T, T-Mobile? I mean, we've got a clear outperformer in the market on some very T-Mobile specific news. AT&T, on the other hand, looks like maybe it's coming under pressure with everyone fretting about debt loads. What say you?
Yeah, I think debt is kind of key. Of course, the inability to pay that dividend is obviously going to be a big drag on the stock. But I'm just looking at this sector and just looking at how this economy is going to be changing once we get out of this COVID crisis. I think 6 months from now, the economy is going to be recovering, but it's going to be different. And I think one of the ways it's going to be different is a lot of people that are starting to work at home. Many of them are going to stay at home. And I think companies like T-Mobile and AT&T are going to benefit from that. They have a lot more home offices, a lot more services, a lot more premium internet they can sell and the like. And I think a new economy, I think AT&T will be fine in the long run. In the short run, yeah, we might take some pain, take some lumps like the rest of the market as we go lower.
Okay. So how do you go about trading a stock that is maybe going to test the lows throughout this, but right now has kind of got a battle? Because on the one hand, I hear again that you got to find companies that have been around for a long time that have stable dividends. AT&T seems to fit that bill, except they've undergone a lot to turn themselves into a growth company. So it's hard to know which category they fit in.
Well, the stock certainly doesn't look like a growth company if you look at the long-term chart, but it's been very stable, like you said, and they've been paying that big dividend. A lot of people love that big dividend. That said, I don't think they're going to be going under anytime soon. I think they got a lot of cash coming in, even with all the debt they have going on. And I do like the fact that they're positioned to go forward in the new economy. I think the economy will be, we will pick up again. The sun will rise at the end of all this. It's going to be a tough ride until we get there. I do like how AT&T is positioned once that all happens. And I'd be happy to own the stock on the lows. So I'd actually look at doing a trade right now after this downgrade, after this 3.5% drop in AT&T. I'd look at the low of last month, $26. I'd go out into May, and I'd be comfortable selling a put in May for the 26 put, which would get me in at the low of last month. I collect $1.60 for that, and for that I could get into the stock essentially for $24.40. So that's a really attractive level for me to get into the stock if I do get put to that. On the flip side, if I don't get put to that, I just get to collect that $1.60. Not a bad return given things the way they are right now. So I can just sit on that. If I get the stock, I'd be happy. If I don't get the stock, I'm very happy, because $1.60 is a really rich premium for a company like AT&T, which does not move around that much, except when we are in very uncertain times like we are right now.
I like this take here, Joe. You don't hear it a lot, that stopping the buyback could be good for the company, and maybe that money gets put to work elsewhere. Interesting. I like it. So a little bit neutral, a little bit bullish, a bit exposure here to the upside, but you're not going to get slammed. You've got downside buffer to this trade.
I would say with the rest of the market, yeah, the rest of the market, we're here at 2,500. I think maybe we could test the lows again there too. So I'm just picking a level where I'd be happy to get into it, not necessarily jumping in with head first without really knowing what's going on, because the market is really volatile right now. It's going up and down really fast. We got a VIX at 55. That's a 3.5% move implied. So there's a lot of moves going out there, so we got to be careful when we get in.
Hey, Joe, on the market as a whole, right now, S&P's trading around 2,500, pulled back deeper than we've seen over the past week. This is the worst start to a day that we've had since markets bottomed out. Does this mean that the inevitable test that everyone's been talking about is coming, or does it depend how we finish the week with all this data hitting us? I mean, we're not selling off on the data this morning. We're just actually kind of slowly grinding our way out from where we began.
Yeah, I mean, first of all, we're waiting on the data, and then we're going to be waiting on more data once we get that data. We're also waiting on guidance from all these companies. Many of them have suspended. Very few have actually guided. So we're really, out to sea without a oar or something. Like we don't know where we're going right now. It's very uncertain times. For me, I think retesting the bottom, maybe even going lower, is probably in the cards. I'd be worried about that. That said, I'm happy being in my stocks with my hedge, even though the VIX at 55, we might not see it touch 80 again, which is where we were on the first low, just because There's so much has happened since then. Of course, the Fed's come in significant ways. We had that bailout package, the first bailout package come through, so that kind of put a ceiling on the volatility. Maybe some companies aren't going to be going bankrupt after that. So we can go lower. The VIX might not necessarily have to go higher while we do that.
All right. And I like that point, Joe. We were actually talking about that this morning, that if we do see some calm in this market, it could drift lower, keep going lower without a big spike in vol. Definitely some interesting trading as a result. Joe, we're going to continue to talk about that with you. Appreciate
like
the
insight.
I said
with AT&T,
go ahead.
Like I said with AT&T, I like, once we get out of this, I like big tech with cash on hand. I think if they're able to go out and pick up the winners or pick up the losers, if there's a company out there that really got hit hard, you might see Amazon buy another brick and mortar. You might see Google step in and do some buying. They have cash on hand. I'm going to like them at the end of this because I think they're going to be fine. I do, however, think the economy is going to be a little different, maybe a lot different 6 months from now than it was 6 months ago.
All right, Joe Tigay, Equity Armor Investments. Cash is king. The companies that have got it. I like it. Appreciate the trade on AT&T here. Joe Tigay joining us.